Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. It's Wednesday. Dow Jones up about 300. NASDAQ down about 100. S&P kind of flat. Okay, so we got resistance right on the S&P, right at the 200-day, and that's where we're sitting. We're sitting right on that 200-day moving average. Now, I do think we're going to come down and retest the February lows. It's just my opinion. I believe that's going to happen. Now, could we break above this 200-day first? Yes, we have a couple of gaps to fill up there, and then we'd come back down. But I think this resistance is going to hold, and we'll just start to come back down, retest the February lows, find the bottom, and then start to head higher in the market. That's my take on it. Let's move on to the real estate market. Now, I love this stuff. You guys know that. Now, we got news out of Redfin. Okay, they reported the March numbers. The March numbers, guess what? The average price of a home in the United States increased to $412,000 in March. Now, Redfin's reporting this is the strongest March ever on record. Now, here's what they're not telling you. They're not telling you that the sales volume was down 10% year over year. Now, if it was the strongest month on record, why would the volume be down? Now, yes, there was more expensive homes that sold than cheap homes because, well, the inventory the way it is, there are more homes in the higher price range than the lower price range right now. Okay, so we had more expensive homes selling, but we had less of them selling, down 10% year over year, and actually dropped another 4% month over month. So sales are kind of slowing down, right? Now, prices are at record highs. I'll be the first to admit that. $412,000 for the average price home in the United States. But let's take a look at that. When were these homes sold? Well, this was for March, right? So these homes went into contract a month earlier. They went into contract in February. Now, in February, what were interest rates? They were about 3.5%. 3.5%. What are they at the end of March? About 5%, right? Okay, so when these homes went into contract, well, the rates were still at 3.5%. Now they're up at 5%. Look, Americans are really, they're buying homes that they can't afford. Let me explain this a little bit. All right. So when you go in to apply for a mortgage, there's a debt to income ratio, and normally they go up to about 30%. Well, right now, the debt to income ratio is at a record high. It's up closer to 40%. Now, we did not learn anything from the subprime crisis. We're still giving people loans that they can't really afford. They're getting overextended. Now, let me explain something else to you. You see that 5% number that they're advertising for a 30-year fixed rate mortgage? Well, that's the number if you have a great credit score. If you have an 800 credit score, yes, you can get that loan for about 5% interest. What if you don't have a good credit score? Well, what if you're down 700 or 600? Well, guess what? That 5% interest magically turns into 6%, almost 7% in some cases. So the affordability factor is really going down. Basically, we're selling people homes that they can't really afford. Now, what's this going to do down the road? Well, I'm a real estate broker, and a lot of banks, they think that there's going to be a lot of people giving these homes back to the bank when they're going to make their payment for 6 months, but what happens if a recession comes and they get laid off? They're going to foreclosure, and they give the keys back to the bank. I can't afford this payment. They realize they can't afford the payment, but that's down the road 6 months still, maybe even as far out as a year. But a lot of these are going to be given back to the banks. Now, what are the banks doing? Well, they're contacting agents like me. And what are they saying? They're saying, hey, Mike, we are planning on taking back a lot of real estate, a lot of houses. Would you like to be onboarded directly with Wells Fargo, Bank of America, Chase, all the big banks? Would you like to be onboarded so that we can just hand you these properties and you can put them on the MLS for us and you can be the broker of record? You get get credit for the sale. We'll pay you to sell them because we don't want the properties back, Mike. We're a bank. We don't want to own the properties. We want to dump these properties as soon as we get them back. But we're planning to get an awful lot of these properties back because we kind of see this recession on the horizon. We kind of see that this might kind of make the real estate market start to unravel, and there may be millions of these properties coming back. Look at right now, Mike, we already are taking back these properties. We have 1 million people right now in foreclosure, 1 million people that haven't paid their mortgage for 3 to 6 months. And that's just the people that we're foreclosing upon. That doesn't count the people that are in forbearance. Now, forbearance programs, there's probably somewhere between 5 million and 10 million people right now on forbearance that are not making their mortgage payments. And as long as they don't have to make their mortgage payments, well, they're happy to stay in the house. But that forbearance runs out. You see, it's 1 year to 18 months, and somewhere in between there, the forbearance runs out, and they have to start not only making their mortgage payment, they have to make up for the payments they didn't make. So all of a sudden, they're starting to think, well, wait a minute, maybe I should start to think about selling my house while I still have some equity in it. Yeah, that's probably a good idea. If you still have equity, you might want to think about selling it if you can't afford the payments. And a lot of these people that are buying houses right now, they're really extending them out there at the 40% debt to income ratio. Look, your income is not going up quickly enough. Inflation is eating away at how much you can pay. A lot of these people that are buying houses right now are going to find out that they cannot afford the payment on the house that they just bought. Now, look, there's going to be millions of these coming onto the foreclosure market, okay? That's where the inventory is going to be coming from. Now, when you hit into the recession and prices start to go down, well, the equity kind of erodes really fast. You see, a lot of people only put 5 or 10% down. Now, the statistics they report, they say, well, they put 20% down. Well, some of these people, that what they do is they go get a 10% hard money loan. Now, those hard money loans are up at 8 or 10%, and then they get the 80% loan. So they got 90% right there. But then they go out on top of that and get a home equity line of credit for another $5,000. Well, that's 5% of. So they got really just 5% into this for the equity. Now, if prices go up, that's great because they're just making money and they can refinance and everything will be all right, right? Well, what if prices go down? Well, they got 5% equity. That equity goes away like that. Now, I think that equity, about 50% of the equity is going to go away. But once again, that's just my opinion. But what's fascinating. This is what's fascinating to me. Okay, being a real estate broker, I get all these people sending me emails. Now, these emails are flyers. They're kind of like, they just spam all of us real estate brokers with price reductions. Every time there's a price reduction on a home, they want us to know about it because maybe we got someone that can come and save them. You see, what we got now is a little bit of desperation going on. A little bit of desperation. That's right. There's desperation in the sellers right now. If it doesn't sell within the first or second week, they have a price reduction. Now, granted, us real estate brokers, we have to say price improvement, but check out some of these price reductions. Okay, now I live in, around the Bay Area. I do a lot of sales in San Jose, for example. San Jose, the average price reduction right now is $93,000. Okay, now only 5 or 10% of the homes are actually reducing prices so far, but the average is dropping the price by $93,000. Now, I realize I'm kind of an older guy, and well, I bought my first home in San Jose for $90,000, right? I bought a duplex in San Jose for $92,000. right? Those were a couple of my first purchases ever. But right now, the average price reduction on a listing is $93,000, more than I paid for those. That's just crazy to me. Now that it might seem perfectly normal, but these price reductions, okay, you can go around the country. I'll just give you another example. Look at New York. Last year at this time, the average price reduction was $38,000. You know what it is right now? It's $68,000, almost double, right? I mean, that's just crazy. These price reductions, they're coming more and more. Now, granted, mostly throughout the country, I think the number of homes that are price reduced is on average of 12% of all listings have price reductions. But there are some areas where they're up to 15, 20, 25% are having price reductions. You want to talk about an unraveling going on? Well, if you live in Boise, Idaho, be careful. It's starting to unravel there. Those price reductions are coming fast and furious. And it went up so fast. Home prices, before the pandemic, $250,000. Middle of the pandemic, they were $500,000. Then they're $800,000. Well, it's starting to unravel. It's going the other way now. Okay. And there's a lot of places like that around the country. Now, I'm sure maybe you live in an area where it's still strong, still going up. But you got to look out for this stuff. I'm telling you, there's going to be a recession coming. And when that recession hits, well, jobs go away. People get laid off. People go into foreclosure. There's going to be a tsunami of foreclosures coming. Look, I may be early when I say about this 50% off sale. I'm not wrong. I might be a little bit early. I don't know how long they can keep it propped up. Maybe the Fed just goes out there and buys everybody a house, passes a law that you can't sell a house below $5 million. I don't know what they're going to do. They're going to try to prop it up. They're doing it with 40-year mortgages, 50-year mortgages. The Fed says they're going to shrink their balance sheet, but you go on the Fed website, they're still buying stuff like crazy because they know for a fact that this does not end well. They want to extend it as far as they can. Now, maybe they can kick this can down the road a little bit longer, but I'm telling you, a half off sale's coming soon. Anyways, if you like this stuff, give me the thumbs up. If you really like it, punch the subscribe button. Get out there. Have a great Wednesday, everybody. We'll talk again real soon. Bye-bye now.